Should we buy or sell Hudson Technologies? So first off, read this disclaimer carefully. And of course, do your good deed of today by liking and subscribing. And we do have a theme in the megatrends, and the megatrends, they are performing well. They are outperforming from the low S&P 500 with 344%. But definitely more away from the 52-week highs. The thing is that cryogenics is a very interesting theme. We are, 76% away though from the 52-week low, so been some big moves. We do see that Hudson Technologies is 273% away from the lows, and we are at the highs. This is the company's website, Hudson Technology, reclaiming the future together. So yeah, they make refrigerants. So yeah, committed to providing products and services that reduce greenhouse gas emissions, increase energy efficiency, and promote sustainability to, a lot of blah blah blah. Initial refrigerant sale through recovery, reclamation, and reuse. Okay. But basically, yeah, they are in the cooling business. That's the thing. So they do certainly fit the theme. So here is the chart. Weekly data points. We do see that, there's been a bunch of moves here. So let's zoom out a bit. This is, very, very much a big picture. It is very interesting to see, what happened here after the IPO. So here is, an example of how a stock can be on this huge to-the-moon rally, and then it peaked. So how long has it been in a downtrend vis-a-vis those highs? Let's actually see. So from this high all the way to this low, that was 3,143 days, a minus 98% pullback. So it's good. This is one of the reasons why I really do not like euphoric rallies. They can end really badly, really badly. But Hudson, it has been forming lows, and here it formed a massive rounding bottom. This is also a bit rounding bottom-ish. We do see that there is a tendency for there to be these time cycles: rise, decline, rise, decline, rise, decline, rise, decline, rise. The time cycle suggests that we do have a declining phase here around the corner, and if we look here at the previous mid parts of these time cycles, they have been pretty good at telling you about, when you should consider shorting the stock. Obviously, there's no guarantee that it will continue to function like that, such that you can print money in perpetuity. The thing is that the time cycle suggests that there is a pullback around the corner. We definitively have seen a very strong rally, and the big winners, they bought near the low. So far, for those, heroic people who bought near the lows, they have, approaching 2,000% rally. If you were waiting to get, that breakout above this resistance level here, like an example, even if you were to get all the way up here, that would only, quote-unquote, be a 58% rally. This is one of the reasons why, when it comes to bullish trades, I am a bigger fan of buying in near lows. Obviously, there's more... you can also get burnt, of course, when you do that. But the times when it works out so well that it makes up for the times when you get stopped out. But yeah, let's look here at the daily data points. So we do have a strong rally. So this is one of those cases where, the bulls are obviously in control, but then we have to ask the question, okay, based on the history of this stock, what usually happens when bulls do this, or in this situation, have made these kinds of moves? Looking here at the RSI, we are very high. Have we been higher in the past? Yes, but more often than not, we were lower. Looking at the distance between the purple 20, green 50, blue 100, and red 200 weekly moving averages. That's what the PPO measures. Have there been times where we were higher? Yes, but when it comes to actually the 200-week moving average, we have never been higher. When it comes to the blue 100-week moving average, the previous time we had these readings, it was during this peak, and then we did have a very substantial pullback, and also during this peak back here, if we measure this pullback, this was a pullback of, wow, minus 81%. That's a pullback. Wow, that's pullback. Looking at the daily data points, we have a similar message. We are very high, but yes, we have been higher sometimes in the past. So when it comes to Hudson Technologies, I would say overbought RSI. It should sort of auto-complete because, anyway. Yeah, we have very, very high readings. Previously, these readings usually are more favorable to the bears. When it comes to time cycles, we have the coming part of the time cycle is bearish, and the time cycles, they have been pretty darn good at calling the major bias to the stock. So in terms of giving the technicals a bit of a rating, yeah, I do think I will give a -5. So let's look at the seasonality for Hudson Technologies. We start here to the right, and here we do get the average, price action. Yeah, it is pretty clear that so over the last 10, 7, and 5 years, the seasonality here is actually bearish towards late June. That is when we usually see some strength. To the left, over the last 5 years, April is decent. May is actually a bit strong-ish. But when we look here at the average price action here, well, average seasonality here to the right, we do see that May usually is strong early, but then very quickly we do see that there's a reversal of fortune. So that is why it's very important to compare these two perspectives on seasonality. Over the last 10 years, April is strong, but then all of a sudden May is actually one of the weakest months. June is mediocre because, yes, we do close higher 56% of the time, but the average performance is -3.5. Then over the last 20 years, then April is decent. Well, it is actually rather strong, but May and June, July, August are mediocre. So while the current month is usually is a little bit left, but we do see that overall the coming seasonality is generally favorable to the bears, but it is a bit noisy. So I will give the bears a -2 here. Then we go to the fundamentals. So let's start here with SACS. They have a number 2 buy, B value, but F growth, F momentum. Industry rank top 41%, industrial services, so rather broad, industry category. Market cap $306 million US. There's no dividend. When we go here to insider activity, we do see buy, sell, buy, sell, 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 buy, sell, buy, sell, sell, sell. So there's been more selling than buying so far in 2022. When we go here to consensus estimates, so we only have 2 analysts covering the stock. We do see that the average price target is 6.3% above the current stock price. Highest is 17% above. Then the lowest is 5-ish below. So here is the most recent price target. So Roth Capital upgrades Hudson Technologies to buy from neutral, adjusts price target to $6.50 from $4. But that has been more than achieved at this point. So that's priced more than priced in. So there was some conflicting messages here when it comes to fundamentals. So Sachs, they are pretty confident on the value still here for Hudson, though they give a bad growth score. The insiders are not feeling that bullish. Price targets also have a bit of a bearish lean to them. At least the most recent price target, which has the most gravity. So I do think I will give this one to the bears, but very slightly. The reason why I only give -1 is simply because Sachs, they do have a lot of influence, when it comes to fundamental analysis. And to buy score and p value, it is good. It is, but yeah. And next, we will look at the correlations. So it's a bit messy how to categorize this one. We do see that there's an 84% long-term correlation with the S&P 500, 77% with the industrial CTF. But interestingly, there is actually 81% here with the technology ETF, XLK. Then minus 10% with the dollar index. Daily data points, minus 1% SPY, minus 1% XLI, then minus 13% with the XLK, then 83% positive with the dollar index. So in terms of correlations, it's a bit messy. So looking short and long term, I do think I will look at the XLI. So let's look at the XLI because it's likely going to have an effect on Hudson. So yeah, looking here at weekly data points, so we did see a very strong rally here for the XLI, but now it has spent, a bunch of time moving a bit sideways and breaking down. We are not seeing signs of a breakout in this case. This is very much rounding, topping-ish. When we look at the history here of this ETF, yeah, this was rounding, topping-ish, and then we did get a very substantial pullback. Here we had a major rally, head and shoulders pattern, breakdown, so it does have a history of doing this. Here as well, rounding top pattern. You could also argue, let me draw that in. I get some smaller like this. Yeah, it looks also a bit head and shoulder-ish. Okay, anyway, the point being is that we are seeing some weakness in the XLI. Let's quickly also look at the daily data points. So the red 200-day moving average has gone from being support to now becoming, well, here it became resistance, and now even the 50-day moving average is becoming a resistance. So here is the relationship between Hudson Technologies and the XLI. So we do see that it is definitively erratic. There have been some kind of time cycles in this pair, but the duration of the time cycles has differed. But it's very clearly one of those buy low, sell high pairs. Very strong outperformance from Hudson so far, and it's doing pretty well. Let's look at the seasonality. What does that say about what we should expect going forward? So in red, over the last 10 years, we should expect Hudson to underperform here towards late, well, frankly, late June. In blue here, over the last 7 years, underperformance towards late June, and in green over the last 5 years. Seasonally speaking, we expect underperformance. So that's definitively some relevant information. Let's look at the relationship between the XLI and the S&P 500. So when we zoom out here, you could certainly argue, so let me draw that in, because I need a big drawing tool now. We have a potentially monster, mother of all rounding tops. So this is a huge rounding top if I ever saw one. That's massive. Let's look here at, the daily data points and have a bit of a peek at seasonality. Yeah, the seasonality over the last 10, 7, and 5 years shows us that the industrials tend to underperform the S&P 500 heading towards the 7th of July. So I think I will give the relative performance score a -2. So we do end up with an average of -2.5. So the data is more favorable to bearish trades than bullish. A key part of the bearish thesis, the trigger event, is that we are definitively very overbought. Very overbought indeed. And the other data we looked at, seasonality, fundamentals, relative performance, it corroborates the bearish thesis. So it is, of course, possible that some people who look at fundamentals and seasonality are going to buy Hudson Technologies, but given what we did see, the chances are reduced. So that is the way to think about any kind of thesis you have. The more participants in the market that are more likely going to agree with your take, then the higher the probability that your take will actually play itself out. But given that the market can be irrational, and another thing, there are people in the market that have access to information that is very exclusive, and they can trade based on that information, and that is how you can get moves that do not make any sense. And that is why it's very important to always use stops, because I've been in situations myself where I have very good data. Everything is pointing in a certain direction, but there's, as an example, in one case, there was an acquisition that was about to be announced. But the market didn't know anything about that. So all of the ratings made perfect sense given the currently available information. But obviously, the split second it came out that the company was going to be acquired in a big way, the massive premium, then the stock moved up very big. And it is in those situations that you will be very happy that you used stops.